Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Promise, we're going to shift from equities to commodities for a bit. Manisha Gupta joins in now to give us a list of all the commodities that are buzzing this morning. Hi Manisha, good morning.
Morning, and thank you so much for that, Sonia. Let's start with the crude oil prices, where you have seen some strength return back after hitting a one-week low and seeing a decline of 0.5% in the previous week. We are back into green in the Asian markets right now. So the global prices are trading 0.5% up, and that's exactly how the Indian markets have opened trade for you as well. There has been support on the back of geopolitical concerns. You also have seen the US rig count decline. The US inventories have seen a decline come in as well, and all of that is showing in the prices. Flat trades is what you have seen for the gold and silver prices. We did see a knee-jerk reaction Friday night after that US shutdown, but clearly that's not having an impact in the markets right now, and we have seen a bit of a profit taking coming in for that precious metal space. Good buying has emerged in the base metal prices. In the meanwhile, Shanghai steel prices open 1.5% higher. Iron ore is trading a percentage point higher as well. There is restocking in China ahead of the Lunar New Year holidays. That is supporting all of those base metal prices. And apart from that, you also have seen strong economic data, whether it was the China GDP and the manufacturing numbers in the previous week. You also have seen strong US manufacturing data. Business activity has expanded. You have seen the inflation numbers go up, and all of that has been supportive. In any case, many of these metals are looking at estimates of strong demand and deficit continuing for most of 2018, and that in turn also is finding its way in prices. Trading strategies, and we have them from Angel Commodities today. They have a buy call coming in for the gold prices. 29,900 is their target for the day-to-day on that. They also have a strategy in the metals as a sector. For zinc prices, they're expecting that one as well to go higher to up to 221 rupees per kg for the day.
Okay, thanks a lot for that, Manisha. Well, markets in a fine spot at this juncture. Okay, I think I spoke too soon. Now the mid-cap has gone back into the red, but it's marginal. It's still dilly-dallying in a very narrow range. So watch the space. The Sensex is still higher, about 100 points higher. Things are still very wobbly and market looking for direction. But maybe we will get that from the investor we now have with us. Vijay Kedia, Managing Director, Kedia Securities, is joining us. Good morning, Vijay. Thank you very much for joining us.
Good morning.
Well, first up, you've seen many of these cycles. This is a question I've asked a couple of others as well. How does this present juncture feel like? Is it feeling like 2003 when we will still have a long climb ahead? Or is it feeling like we are in the middle of a bull run?
Okay, I will tell you. I will share a different perspective with you. I may be wrong also in that, but it's okay. This is what I am feeling. I think post 2003, there has always been a bull market in India. From 2003 till 2017. So according to me, this bull market is 14 years old. Okay. I will give you some example. Before 2003, in any bull market, there used to be only one leader. For example, 97 or 2000, IT was the only leader. All other sectors did not do anything in the market. Before that, cement was the leader in the market. And everything else did nothing. Before that, if you remember, in late 80s, textile was the leader in the market. Yeah. Bombay dyeing, Century was the darling of the stock market. I know one broker who kept his daughter's name Century. Okay. Sorry, I did not know anybody who kept their son's name Orke. So that's a good part of it. Before that, automobile was the leader. Post 2003, some structural change took place in India, and many sectors became the leader in the market. For example, 2003 to 2007, capital goods was the leader, automobile was the leader, and so many, even banking was the leader, not single sector, so many leaders were there in the market. 2007 to 2014, which is termed as the bear market or the worst market in the history, that is the time when I think that most of the people created their wealth. And the kind of wealth was created between 2007 to 2040 was much ahead, much greater than the wealth was created between 2003 to 2008. That you can ask your people coming on your guests coming on your channel, then when did they create their major wealth? So only thing was the allocation was different. So the leadership which was there in 2003 to 2007 changed during 2007 to 14. I personally, I am lucky to have few shares which gave me 100% return, 100 times, not 100%, 100 times return during 2007 to 2014. And I'm sure that most of the HNIs or most of the investors, including fund manager, must have faced the same situation. So only the allocation was different. The stock which did well in between 2003 and 7 did not do well between 7 and 14. So I think that trend is still going on. So this is what my perspective. So let us not discuss, but because that's a myth. I think the definition of bull and bear market is wrong, according to me.
Sure.
I may be wrong in this definition.
So who could be the leaders of the next leg of this bull run?
No, it depends. Like in 2003 and 7, there were 5, 6, 7 sectors which actually led the market. In 7 and 14, also 5 sectors which led the market. Okay, so now this 14, if we say that this bull market has started from 14 in general terms, so there again it will be many sectors will join the party, not only 3 and 4, 5 sectors, maybe 10 sectors will join the party. Some has already joined the party. Some will join maybe later, maybe after 1 year, maybe after 2 years. Like for example, capital goods, which really did pretty well during 3 and 7, did not do well in 7 and 14. They may join the party little later, maybe after 1 year, when the private capex, as we are.
Are you already buying Larsen & Toubro?
No. I am a small man. I've actually all my investments are confined to small caps only.
Yeah.
Small cap and mid caps, because I do not understand large cap. So if I will buy something, I will buy small and mid cap only.
Some of these companies have done well for you, right? Like the Sudarshan Chemicals. I'm not asking for a stock call, but chemicals and all these sort of commodity plays. Where are we right now in the cycle? And do you think this cycle still has upside?
Of course, I think this cycle started from 2014. Before 2014, if you will see that all these chemical industries did nothing. Actually, they did not create any wealth for Indian investors for maybe for 20, 25 years. Maybe because of the factor that China is the main factor which everybody is discussing. So I'm not going into discussing that because my knowledge also about all these things is very limited. So all these actually bull market in chemicals started from 2014. So this is, I think this should continue at least for 5 to 10 years.
Okay. The other space that you've been interested in is some of these consumption-oriented stocks. We were talking in the break about how you like something like a Kokuyu, Camlin. You've spoken about that in the past, but I want to just understand from you what the rationale is about the industry outlook. Is this a sector that will see a compounded growth, and why this stock in particular?
Okay, let me tell you, there are 2 disclosures in this company. One, of course, I hold the shares. And second disclosure is that I really took pretty long time to pronounce the name correctly. Okay, it's Kokuyo sometime. So anyway, whatever it is. So it's a Kokuyo Camlin. It's a Japanese company. And of course, it's an expensive shares. I'm not recommending anybody to buy because it's an expensive stock right now. This is you can call it, it's a proxy to the education sector, small proxy to the education sector. And plus this stationery market in India is worth 20,000 crore. This company having a turnover of just 600 crore, 650 crore or something. And in spite of that, they went ahead and set up a plant at the cost of 100 crore, which is state of the art, one of the best plant in the Kokuyo Camlin group. Okay. So I think going forward, turnover will also double in 3 years' time, and this margin, which is very low ebb, will also improve going forward. Okay. So it's a long-term story. I'm ready to hold the shares for maybe for 10 years. I don't know. I may sell tomorrow if something changes. Okay. But as of now, I think that it's a long-term story. Nothing is going to happen in 1 quarter or 2 quarters or 3 quarters.
You have a stake in Karnataka Bank. Are there any other smaller banks that you will look at either because of M&A play or because they will grow organically?
No, right now I am focusing on Karnataka Bank. Although I have sold some shares, some of the half the shares or 1/3 of my shares I have actually sold in the market for a temporary. Maybe I will buy it again. Okay. So, because I still think that the pain in all these companies are still not over, because now we are hearing that the third NCLT list is also about to come. So let us see what is going to happen. I think, but March should be the last quarter when all these small banks will face some problem.
Okay. So Vijay, you have of course always remained 100% invested. We've seen a lot of money come into our market from small investors via the mutual fund route all through last year, and last year was a phenomenally good year. What would be the advice to small investors in terms of keeping the expectations for this year and for next year?
What is happening for last 20, 30 years, channel like you and others has been actually teaching all our investors to buy for long term. So the slogan was buy and shut your eyes, right? Now the problem is this, that people are shutting their eyes and buying. So we should just caution the people, caution the investors.
Invest now, investigate later.
Yeah, don't shut your eyes and buy.
Yes.
Buy and shut your eyes. So I think the quality of the management is very important. As I always say on various platforms, like Vidya Balan says, entertainment, entertainment, entertainment. I always say management, management, management. So it's very important to, sometimes I feel that my investment in the stock market is like boarding a flight. Before boarding the flight, you do all your research, what is the ticketing cost, what is the track record of the airlines and everything, whatever. After you board the flight, then you have got nothing to do, just to sit back and relax, as they also announce. So this is what investing is like. On the same theory one should apply in investing also. So better to buy a good sector, better to buy good management, and then sit back and relax. Just don't be euphoric. As I just say, be doubtful, be fearful, and be careful in this market, or in every market for that matter. Not at this juncture, at any juncture, one has to be careful.
Okay, what is the next sunrise sector you will look at? I mean, you have your finger, consumption a bit, banking a bit. You've got many chemicals. Which is the one that you're just eyeing and not plunging?
No, actually, it's very difficult to predict that. So that is why my investment is diverse in so many sectors. So I don't think so.
Okay, so let me just ask you one final question then. Home improvement is one theme that you have liked in the past with names like Cera Sanitary Ware, etc. Once again, it's come back into flavor. You think there could be big growth here?
No, of course, growth will be there. You see, one thing I will like to tell you, bull market is not that your stock becomes from 100 rupees to 1,000 rupees. That is not the bull market. Bull market means, suppose if you are getting a 10-15% return even in bad times, even 10% return in bad times is a bull market. So in bad times, you are making 10% return. In good times, you are making 20-30% return. So your blended average is somewhere around 15-20%. Then also you double your money in 3 years. In 10 years time, you are having nine times. Yes. So Cera has given 100 times return between 7 to 14, as I said, or 7 to 17. I don't expect it to rise further 100 times from 17 to 27. But of course, even if the company rises 15% or 20%, then also it will do good for me.
Fair point. Mr. Kedia, it's a pleasure speaking with you. Thank you very much for dropping into our studio.
Thank you.
And giving us those gems. Management.
Yeah.
All right, we'll have to wrap up Bazaar on that note.